Hey there, Pat Struby, founder of Preservation Specialist, with this month's commentary. And this month, I'd like to focus on two things that are on a lot of people's minds: increasing interest rates and your investments. Now, if you're tired of hearing about interest rates, believe me, I get it. The reason I believe rates are being talked about so much is the US Federal Reserve has made not one but two historic decisions in recent years. For the first decision, take a look at this chart. Since early 2022, the US Federal Reserve has raised interest rates higher and faster than at any other time in its history. That alone would have a massive effect on our country and economy. But this is actually the second historic decision they've made. Take a look at one more chart as we widen the view to look further back. In addition to raising rates higher and faster than ever before, the Fed is doing so after keeping interest rates at historically low levels for, wait for it, longer than ever before. These two decisions about interest rates have had a significant impact on your investments over that time. So much so, I thought it would warrant discussing over multiple months of videos. For this month, my focus will be on how these changes will affect investments in commercial real estate. Low interest rates are beneficial for investments in real estate for two reasons. First, if the portfolio manager is borrowing, they can do so at a low cost. The second reason is because the income generated by the real estate is so attractive compared to other options. We've really liked investments in real estate since the Fed dropped interest rates all the way back in 2009. Think of it this way: if a real estate portfolio can pay dividends of 5 or 6%, that's a heck of a lot better than putting your money into a CD or bond paying 1 to 1.5% interest. Fast forward to 2022 and 2023. Interest rates have soared much higher and faster than anyone previously expected. What we've seen from many of our real estate managers is they have decreased the value of their portfolios. The manager's portfolio may still be generating 5 or 6% in dividends, but now a CD might earn about the same interest. This means the portfolio isn't as valuable by comparison. So, if you have real estate investments in your portfolio, there's a good chance the value may have dropped during 2023. The good news is we stay in close contact with all of our portfolio managers, and in all of the discussions we've had this year, the real estate itself is in great shape. It's rented out and generating income. So don't worry, it's not some abandoned shopping mall that's surrounded by miles of empty parking spaces. Believe me, I've had clients ask. The next logical question is, what should we do about these real estate investments? While no one knows the future, we're confident that interest rates are at or close to the highest they will be for a long time, and we also believe interest rates will need to start going back down again reasonably soon. Why do we have that confidence? First, lower rates benefit the economy, so the Fed will likely lower rates as soon as it feels it can. And second, our country simply can't afford it. Our total debt has now crossed over $33 trillion. If interest rates stayed this high, the interest on our debt would eat up a bigger and bigger portion of our annual expenses. To summarize, we believe that the real estate portfolios we work with are of high quality, and we believe interest rates will start to go back down again in the near future. And when interest rates go back down, it's reasonable to expect the value of that real estate to go back up again. While there's no guarantee, it certainly feels like a great time to be investing in commercial real estate. While some of that can be complicated, I hope it was helpful. As always, if you have questions about any of this, reach out to your advisor. They're available to answer your questions about this and anything else related to you meeting your retirement goals.